Hey everyone, welcome back to Iraqi Dinar News Update. Today we need to talk about something that's creating serious concern across Iraq's economy. And if you're holding Iraqi dinars, you absolutely need to understand what's happening right now. We're looking at a developing liquidity crisis in Iraq that's already causing delayed salary payments to government employees, and economic experts are warning this could signal prolonged financial strain with direct implications for the currency you're holding. This isn't speculation or rumor. This is verified reporting from Shafaq News about a real crisis unfolding in Iraq's financial system right now. Stay with me because I'm going to break down what's happening, why it's happening, what economic experts are saying, and most importantly, what this means for Iraqi dinar holders and Iraq's economic stability moving forward. Let's start with what's actually happening on the ground in Iraq, because the facts here are concerning. As of January 29th, government salaries had not been disbursed to public sector employees. Now, here's why that's significant. Iraqi government salary payments are typically issued between the 20th and 25th of each month. We're now past that window, and payments still haven't gone out. This has created growing frustration and anxiety among state employees who depend on these regular payments. According to informed sources cited by Shafaq News, the delay is being attributed to a shortage of cash. Let me be clear about what that means. It's not that the government hasn't completed payroll lists or funding procedures. Those administrative steps have been finished. The problem is liquidity. There simply isn't enough physical cash available in government banks to make the salary payments. That's a fundamentally different problem than administrative delays or bureaucratic slowdowns. Limited liquidity in government banks is being cited as the main cause of this disruption. When we talk about liquidity in banking terms, we're talking about readily available cash that can be immediately used for payments. Banks can have assets, they can have accounts, they can have obligations on paper, but if they don't have sufficient liquid cash to meet immediate payment needs, they face exactly the kind of crisis we're seeing now. The Iraqi Finance Ministry has issued directives trying to manage this situation. According to an official document, the finance minister has instructed all departments and branches to maintain working hours during and even beyond official times until salary distribution is completed. That tells us they're treating this as an urgent crisis requiring extended operations to resolve. The Federal Finance Ministry has announced that it has begun releasing salary funding for state institutions, but here's the key detail. They're ordering payments to be made in batches. Not all at once, but in stages. That's another indicator of constrained liquidity. If sufficient cash were available, there would be no need for batch processing. The fact that payments must be staggered tells us the liquidity shortage is real and substantial. Now, let's talk about what economic experts are saying about this crisis, because their analysis reveals the deeper structural problems at work here. Economic analyst Nabil al-Marsoumi, who is a recognized voice on Iraqi economic matters, has issued stark warnings about this situation. He's cautioning about widening financial instability and the persistence of the salary crisis in the absence of a fully empowered government. Here's where Iraq's political situation intersects with its economic crisis. Iraq currently has a caretaker government, not a fully authorized administration. Al-Marsoumi is warning that potential U.S. objections over the appointment of Nouri al-Maliki as the next prime minister could delay approval of the 2026 federal budget. Without an approved budget and without a fully empowered government, Iraq's financial system operates under severe constraints. Al-Marsoumi stated clearly that Iraq needs a new government to replace the caretaker cabinet. He's warning that continued delays in government formation will intensify economic and financial disruption. Now, why does government status matter so much for this liquidity crisis? Because a caretaker administration lacks the legal authority to take certain financial actions that a fully empowered government can take. Specifically, Al Marsoumi noted that failing to form a new government would leave the caretaker administration without legal authority to borrow from state banks. This is crucial because borrowing is one of the mechanisms governments use to manage temporary liquidity shortages. If Iraq's caretaker government legally cannot borrow, its options for resolving cash flow problems become severely limited. The economic analyst warned that recent salary delays could continue in the coming months and may actually worsen. That's not a one-time problem. That's a structural crisis that could persist and escalate. For Iraqi citizens depending on government salaries, that's devastating. For the broader economy, it creates instability, reduces consumer spending, and damages confidence in government institutions. Now here's where it gets even more concerning for dinar holders. When asked about the possibility of resolving this financial crisis without a rise in oil prices, al-Marsoumi said there is no real hope. Let that sink in for a moment. Iraq's ability to overcome this liquidity crisis, according to this economic expert, depends fundamentally on oil price increases. Without higher oil revenues, the crisis persists. While oil prices are currently approaching $70 per barrel, al-Marsoumi described this increase as temporary and tied to geopolitical tensions. He's predicting prices will fall once regional security conditions stabilize. Moreover, he stated that even if oil prices did rise sustainably, any boost in oil revenue would not reach Iraq for at least 2 months. That means, even in a best-case scenario with higher oil prices, Iraq faces at least 2 more months of financial strain before seeing relief. This analysis reveals Iraq's fundamental vulnerability. The economy is overwhelmingly dependent on oil revenues. When oil prices are strong, government finances function. When oil prices are weak or uncertain, the entire system faces pressure. This isn't new information, but this liquidity crisis demonstrates just how acute that dependency is. Now, there is another perspective we need to consider. Muther Mohammed Saleh, who serves as an advisor to the caretaker prime minister, provided a different view to Shafaq News. He explained that the government can legally resort to borrowing if the federal budget is not approved and a temporary liquidity shortage occurs, but with important limitations. According to Saleh, such borrowing must be limited, short-term, and strictly allocated to essential spending. It could be used to cover priority obligations, including salaries, pensions, and social welfare payments under the Federal Financial Management Law. This provides a legal mechanism for addressing the immediate crisis. However, Saleh emphasized critical constraints. The borrowing must be domestic, not foreign. It must be short-term, not long-term commitments. It cannot be used for new investment spending, only essential current obligations. And crucially, repayment must follow after budget approval. These limitations mean borrowing can provide temporary relief, but doesn't solve underlying structural problems. Saleh noted that ensuring continuity of salary and pension payments is vital to economic and social stability and strengthens public confidence in fiscal and monetary policy. He's right about that. When governments fail to pay salaries on time, it damages institutional credibility and creates economic disruption as government employees, who represent a substantial portion of Iraq's workforce, suddenly lack purchasing power. So what does all of this mean for Iraqi dinar holders? Let's connect these dots to currency implications because that's the practical question for anyone holding IQD. First, liquidity crises in government banking systems signal broader economic stress. When the government struggles to access cash for basic obligations like salaries, it indicates fiscal pressure that can affect currency stability. Currencies are fundamentally backed by the economic strength and fiscal health of the issuing government. Evidence of fiscal strain creates downward pressure on currency confidence. Second, Iraq's dependency on oil revenues for government financing means the dinar stability is tied to oil market conditions. We've discussed this before, but this crisis makes it concrete. Oil prices around $70 aren't sufficient for Iraq to meet its obligations comfortably. Economic experts are saying there's no real hope of resolving the crisis without oil price increases. That means the dinar's outlook is closely tied to unpredictable global oil markets. Third, political uncertainty compounds economic vulnerability. The inability to form a fully empowered government limits policy options and delays budget approval. This creates an environment of uncertainty that's negative for economic confidence and currency stability. When investors and businesses face uncertainty about government formation, budget approval, and policy direction, they become cautious, which can affect currency demand. Fourth, the potential for ongoing salary delays in coming months means this isn't a one-time disruption. If government employees face repeated payment delays, it affects consumer spending throughout the economy. Reduced consumer spending means slower economic activity. Slower economic activity creates additional pressure on government revenues. It becomes a negative feedback loop. Fifth, the limitations on borrowing authority mean Iraq's options for managing this crisis are constrained. Even if legal borrowing is possible under certain conditions, it's limited to short-term domestic borrowing for essential spending. That's not a robust toolkit for addressing sustained fiscal pressure. For dinar holders, this situation reinforces several critical realities. Currency values reflect underlying economic fundamentals. When those fundamentals show stress, currencies face pressure. Iraq's heavy reliance on oil revenues creates vulnerability to oil price fluctuations. Political instability limits policy flexibility and creates additional uncertainty. Liquidity crises in government banking systems indicate fiscal strain that can affect currency confidence. This doesn't mean the dinar will collapse tomorrow. It means the economic environment supporting the currency is facing genuine challenges that holders need to understand realistically. The Central Bank of Iraq has tools to manage exchange rate stability, and we've discussed their managed exchange rate regime before. But fiscal crises put pressure on any central bank's ability to maintain currency stability indefinitely without addressing underlying structural problems. What should dinar holders take away from this situation? First, understand that Iraqi economic news matters for your holdings. Currency values don't exist in isolation from the economic and fiscal health of the issuing country. When Iraq faces liquidity crises, delayed salary payments, and warnings from economic experts about persistent financial strain, that's relevant information for anyone holding Iraqi dinars. Second, recognize Iraq's oil dependency as a fundamental vulnerability. As long as government finances depend overwhelmingly on oil revenues, the currency will be vulnerable to oil market fluctuations. Current conditions, with oil around $70 and experts predicting temporary increases will fade, create a challenging environment. Third, political stability matters for economic performance. Iraq's difficulty forming a fully empowered government creates policy constraints that limit options for addressing economic challenges. Until political stability improves and a fully authorized government can implement comprehensive fiscal policy, Iraq will face limitations in managing economic stress. Fourth, manage expectations realistically. Some online communities promote narratives about imminent massive dinar revaluation. Situations like this liquidity crisis demonstrate the actual economic challenges Iraq faces. These are the real fundamentals that affect currency value, not speculation about magical overnight transformations. This is IQD Dinar News Update, and our commitment is to bring you authentic information about Iraq's economy and currency markets, even when that information is uncomfortable. Understanding real economic conditions helps you make informed decisions rather than decisions based on hope or speculation. If you found this analysis valuable, please like this video and subscribe to our channel for continued honest coverage of Iraqi economic developments. Drop a comment sharing your thoughts on how Iraq's liquidity crisis might affect the dinar's outlook. This video provides educational analysis and news reporting only. It is not financial or investment advice. Currency markets involve substantial risk. Remember, in currency markets, understanding economic fundamentals and real challenges beats hoping for miracles every single time. This is IQD Dinar News Update, committed to factual reporting and honest analysis. See you in the next update.